Now, one recurring theme for businesses so far this year is the strength of the Australian dollar, or the weakness of the greenback, depending on how you look at it. The questions for them: how high is the Aussie headed and for how long? Back in January, we asked 5 experts where they saw the dollar at the end of the year. And as you can see, at today's value of $1.08 US, all the forecasts are well out of the money. But will those forecasts be out of the money in December? Here's what our experts think today.
We're still fairly cautious about the outlook for the rest of the year, and we do think it will end the year weaker, potentially below 90 cents. And the reasons why we think that are the case is that by the end of this year, I think the markets will start to be looking at the timing of the first American rate rise. And also we think that commodity markets have probably run too hard, and with China slowing, we'll see commodity markets come back quite a bit.
We've already seen the ECB start to nudge up rates, and sooner or later the Federal Reserve is going to have to get off its hands and do similar. Likewise, we are seeing quite pronounced recovery there, and that will gather momentum, and we all know the Fed is, if nothing else, very hawkish on inflation, so they will act, and I think that will make a psychological change to the market, bring about that psychological change that will see us shift back down to 90 cents by the end of the year.
Well, I continue to expect the Australian dollar will depreciate against the US down to around 99 US cents. The reason for that is a very solid US recovery is brewing at the moment, and core inflation in the US economy is clearly rising. And as a result, I tend to think that's going to bring the US Federal Reserve out of its trenches earlier than market expectations. Now, whilst being hawkish on the US Fed has not been a policy which has rewarded investors in the past 6 months or so, my suspicion is we're seeing the clear signs of a very solid and sustainable recovery in the US, and because of that the US dollar would be expected to rally.
We're looking for the Aussie dollar to finish the year at $1.02. That is a little bit lower than where it's currently trading. The main reason is that we are forecasting slower growth in the Chinese economy, and we do think that commodity prices will peak in the second quarter of this year. Also, interest rates in other major economies are starting to move higher, or will start to move higher in 2012, and the currencies of those economies will start to price that in, and that will pressure the Aussie dollar lower against these currencies.
My feeling in the second half of the year is that the balance of news it's a lot more even. I think there's a fair probability that the news on the US will continue to get a little bit better, but it's a little bit more problematic about China, and the net balance of that could be slightly negative for the Aussie dollar. So I'd be pretty comfortable with the forecast of around sort of 99 cents a dollar.
So 2 of our experts are bravely sticking with their January forecasts, and while the others have all lifted theirs, all 5 of our experts are tipping the dollar will fall over the second half of the year.